Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 18th, 2024, and we're diving into Ally Financial's third quarter earnings report. Ally Financial, a leader in digital banking and auto financing, has just released its latest financial results. Joining us today is John, Senior Analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Ally Financial's performance, especially given the dynamic environment in the financial services sector.
Revenue and profitability overview. Let's start with the top line. Ally Financial reported a GAAP EPS of $1.06 and an adjusted EPS of 95 cents for the third quarter of 2024. Their net income attributable to common shareholders was $330 million, with total net revenue reaching $2.1 billion. John, how does this compare to previous quarters?
Ally's performance this quarter shows a solid improvement in profitability. The GAAP EPS increased by 18 cents year over year, and the adjusted EPS rose by 12 cents. This growth is primarily driven by a significant tax benefit from EV lease originations and higher adjusted other revenue, despite facing challenges like increased provision expenses and lower net financing revenue.
Operational efficiencies and future outlook. Ally's net financing revenue was reported at $1.5 billion, with a net interest margin of 3.22%. However, the provision for credit losses increased to $645 million. Can you elaborate on these figures, John?
Certainly. The net financing revenue saw a slight decline due to lower average earning assets and higher funding costs. The net interest margin also decreased slightly. The increase in provision for credit losses reflects higher net charge-offs and an increase in the retail auto reserve rate. Despite these challenges, Ally has managed to reduce non-interest expenses by $7 million year over year, showcasing disciplined expense management.
Looking ahead, what can we expect from Ally Financial?
Ally is well-positioned for future growth, particularly in its core franchises like dealer financial services and corporate finance. The company is focused on executing long-term strategic priorities, which should help in delivering value to shareholders.
Segment performance and strategic initiatives. Let's delve into the segment performance. The auto finance segment reported a pre-tax income of $175 million, while the insurance segment saw a significant increase to $102 million. What are the key drivers here?
The auto finance segment faced challenges with higher retail net charge-offs, but it still managed to maintain a strong portfolio yield. The insurance segment's performance was bolstered by a $103 million increase in the fair value of equity securities and growth in written premiums. Corporate finance also showed strength with a pre-tax income of $95 million, driven by higher revenue and net financing income.
And how about their deposit growth?
Ally's retail deposits reached $141.4 billion, demonstrating strong customer acquisition and retention. This is a testament to their robust digital banking platform and customer-centric approach.
Leadership insights and strategic direction. CEO Michael Rhodes emphasized Ally's do-it-right culture and strategic execution. How does this reflect in their financial strategy and capital management?
Ally's commitment to its core values is evident in its strategic initiatives and financial management. The CET1 ratio stands at a healthy 9.8%, and they continue to pay a consistent dividend of 30 cents per share. Their liquidity position is strong, with $67.9 billion in available liquidity, which is crucial for navigating the current economic landscape.
What are the key takeaways from the leadership's perspective?
The leadership is focused on leveraging their strengths in auto financing and digital banking to drive growth. They are also committed to maintaining a strong capital position and delivering shareholder value through disciplined capital deployment.
Key takeaways. As we wrap up, Ally Financial has shown resilience and strategic focus in its third quarter results. With a 23% year-over-year growth in net income and record insurance premiums, the company is on a solid path. John, any final thoughts on Ally's investment prospects?
Ally Financial is well positioned for future growth, with strong fundamentals in place. Their focus on core franchises and strategic execution makes them an attractive investment, especially for those looking for exposure to digital banking and auto financing sectors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ally Financial's performance in the comments below. Until next time.